Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it popping. We chilling in the trap. I need some crypto, put it in my pocket by any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet. Hey, hey, you talking to the Prophet.
Buenos dias. I don't know why Nelson's laughing is always so funny. That guy's funny. It's a funny guy. Okay. Let's say hello to everyone. Over on the Thetas, we have Unsung, Gordon Bennett, Scorpsion, Biotech Breakout, Virlo, Ramosis. Yeah, that's kind of cool. Get good. I like that. Get good. And stress relief. All right, cool. For those of you, I have a page up. I'm going to show you. Let me show you again. Boop. Let me show it to you better. Okay, this, when I keep telling you guys about trading.tv, give it a look. It's not fully rolled out yet, so they're still kind of slowly rolling this out, and this is still kind of in beta. So they're just rolling this out, but what they're intending to do is link up a full service exchange with live content. Now, for some of you degens, that's a bad idea because you will see something you want to buy because you will listen to somebody that you put way too much faith in, like me, and you will buy stuff you shouldn't buy because you're a degenerate. Well, if you know that you're a degenerate, this is not for you. But if you're not a degenerate, if you are not a, complete, emotionally driven gambler, like we talked about the other day, then this is something that could be very valuable for you because if you find something you've been doing research on, and you find some opinions that agree with that, and you want to just go click, bang, or there's some asset that maybe they have access to that you don't. Although, if you have all of the exchanges that we recommend, then you've already got access to all those things, but still kind of cool. So I would just say, give it a look, check it out, see what you think. All right. Technically, we're supposed to be on there live right now. I can't see it. So maybe we are, maybe we aren't. I don't know. Let's see if we scroll down. Let me see if I go here. What happens? Do we see? Oh my Lord. Let's see, live now. I mean, that's not the right, that's not the artwork, and that's not even the right show, but maybe, well, I'm not going to click on it because that would be so weird. But anyway, that's kind of cool. All right. So let me go over here. So that's Trading TV. So give it a look and see what you guys think. Might be kind of cool. All right. Let's go over, before we do our price review, let me say hello to, who else do we have? Belinda Cooks, Bareilles. Okay, cool. Let me go over here. Barno was first in the chamber. Scorpsion, Joe Fernandez, ¿Qué onda? Ella Paul, Nara, Bitcoin Candy. Oh, Congress. Tube That Pipeline, hello from LA. Biotech Breakout. Michael Murphy, across the pond. JD, Cassandra, what's up? Todd B, Sylvia, Breakfast Leadership, Fair Play, Suze, Michael, what up? Jimmy James, Emmanuel, what's up? Neil DeFlorio. It's funny because Manny and I, we were just talking. Emmanuel, you had messaged me last night, and right by the time I got the message, because it's like 3 a.m. my time, I rolled over, I looked at the message, I looked at the markets, and it had already gone the other way where the alts were starting to move again. I thought that was pretty funny. But yeah, so it is what it is. We got to always back out to get the best impression of what's going on. Neil, good to see you. Do not call me silly scammy caller people. Land deals, good to see you. Okay, cool. So that pretty much sums it up. So quiet day today, but we do have some interesting things to talk about. There's some interesting goings-ons in the market, particularly in the short side of the Bitcoin futures trade. So I found a good article about that. I don't think it'll make that much difference in the price action. Probably won't make any difference in the price action, but it does present an interesting situation. If Bitcoin holds 50, but if it holds 54, a bunch of people are going to get pasted tomorrow. Now, not all short activity is what it seems. Sometimes it's just balance sheet management. Sometimes you're not, a lot of people are, oh, these guys are shorting Bitcoin. Well, sometimes they're not shorting Bitcoin. Sometimes they're future selling to continue to run their business, right? Miners is an example where they would future sell Bitcoin in order to fund their ongoing operations, manpower, electricity, upgrades, and technology, all the way down the list, right? They're not bearish, right? They can't, if you run a business and you have a certain amount of money that you have to pay each month in manpower, insurance, and taxes, and rent, and all these kind of expenses that you have, as those of you that run businesses know, you can't just go, well, I hope Bitcoin goes up next month so I can pay my rent. Like, you can't gamble. So you would forward sell in the same way that a farmer would, or a miner, like miners in the gold, precious metals, all throughout the precious metals. Well, any mining, even if it's secondary metals and non-precious, they pre-sell a lot of their future mining rewards, in a sense, because they have to fund the business, right? And most of those companies they live hand to mouth. So anyway, cool, man. Yeah. So we're going to talk about that. We are going to mention, I found Ripple. Oh, it gets better and better. Is Jerry here? Jerry, I wish Jerry was here. Does anybody find it interesting that MoneyGram, that took $50 million from Ripple to use XRP, comes out and they say, oh, we actually didn't use it. It didn't work. It didn't make us any money. It didn't save us any money. They got paid $50 million to use it. They still didn't use it, and they ended the agreement. Now, if you have a product that saves people money, and then you pay them $50 million more to use that product that saves them money, and they still don't use it, what can you infer from that? I mean, if you're a conspirator, you'd be like, well, they're clearly against, this is the evil, menacing, this is the bureaucracy against Ripple. No, bro, your shit doesn't work. Period. We don't need bridge assets anymore. You don't need a third asset to do a 2-asset swap. If you have liquidity pools, DeFi has shown everyone in the world that if you have sufficient liquidity pools, and that looks a lot like the repo market, or you could make a repo market, if you have a big liquidity pool, you don't need other assets. So I'm going to talk about that Stellar deal because it's funny, because they went to Stellar. They did a deal with Stellar. Guess what? Stellar didn't pay them $50 million. They're also not using XLM, the token. Now, even though the token went up last night, and that's great for anybody that holds XLM, that's awesome. But it's not very likely to move the needle, right? MoneyGram doesn't really do enough business, if we're being honest, even if they're doing USDC, because the idea is they're going to be using USDC, the stable coin. So if we're being honest, it doesn't probably move the needle. It certainly doesn't move the needle for a stable coin because it's a stable coin. And it doesn't really move the needle for XLM because they're not going to be doing so many transactions that there's suddenly going to be no XLM left, because they're not running it. They're running it on the ledger, not across the token. They're not swapping XLM Stellar Lumens tokens. So, come on, peeps. Will there be some tiny amount of XLM probably burned in all these transactions or utilized as fees? Sure. But will it be enough to move the needle? Very unlikely. But you know what it won't be? It won't be them working. It won't be MoneyGram working with XRP's not going to 589 anytime soon. How about that? All right. Let's go to our non-commercial breaks. I turned down another token deal just so you guys know how much I like you. An expensive one. This scammy DeFi thing. These dudes offered me not quite Lambo money, but not Lambo money. Maybe a used Lambo money in their stupid token to talk about their stupid token. So I'm going to refer to it as stupid token. In any way, I told the dude in some choice words. I also get rid of my emails where I use a lot of profanity. And so that was an email that I sent and then erased in the same way that I erase videos with a lot of profanity. Can't have that floating around, bro. My buddy once told me, he was my manager when I was going up and learning sales. He said, listen, don't send an email or a text or anything. Don't send anything out into the internet that you don't expect to not be read back to you by a jury of your peers or displayed. This is article A or evidence, look at item number 3 so you guys should we should all probably think about that. If you don't want something read back to you by a jury of your peers, don't send it. Don't say it. Don't do it. Once it leaves into the interwebs, that's it. It's out there forever. Anyway, we'll be right back. Okay, so let's get some little chill background music going. All right, Crypto for Life, good to see you. Demayan, BZ, what up, man? One of these days you're still in LA, right? We're gonna have to go hang out. Dubai money, can't transfer COTI node maintenance. Yeah, don't worry about it. Just buy this stuff. You didn't transfer anything anywhere. Everything is fine. Okay, Bernard, what's up? Good to see you. Good to see you. And do we have? There was something. Oh, Philippe, Gatomi, Frank Leopard, STUP, Stoop, Tum 4Y, Tume, maybe the 4 is an A. I always try to read these things and get the bet. People are very clever, usually more clever than I. All right, let's do a quick price review. The Bitcoin is at 54. That's going to become important. Oh, one more thing. We're going to mess around with the compound interest calculator. Yes. We're going to play with it today for a little while. For like 5 minutes, we're going to play with the compound interest calculator because it's kind of cool. And then you start to see why staking is so valuable and why the interval is so valuable. Those of you staking Fetch, this is probably a discussion for the compound interest time section, but those of you staking Fetch, if you can redelegate, every day, there's kind of something magical about daily staking. And I'm going to show you that example, daily versus weekly. The interval, the frequency with which your rewards compound. So, quarterly, I'll show you the difference between quarterly, yearly, weekly, daily. Something magical about daily. Of course, it's obvious, but we're going to still go through it. All right. So the Bitcoin 53, it's basically 54, down from 55.5 yesterday, but up from obviously the 7 days, up almost 25%. And kind of leading the charge. You know who's following closely in their footsteps? There's a couple. Theta's doing good. Near is doing really good. V-Chain, oddly. But let's face it, V-Chain is just all about Pumple Stillskin. You could have gone real gross on that. Let's see. The other, Polkadot. Polkadot bounced up about 10% last night. It was crashing. So it was not crashing, but it wasn't performing with these other assets, and then it jumped back up. So that's kind of cool. I think that people unduly punished Polkadot, but you know what? They're not getting the word out on the street, so they're going to need to. So there we go. Ethereum still up 20% on the week. It's not performing. So it's down 5% on the week against Bitcoin, but it is kind of tracking Bitcoin. 35, it's almost 3,600. So pretty good, right? Cake auto compounds 500 times a day. Yeah, but it's called Cake and it has little utility and it's Stupid. So it's like all of this stuff auto compounds. If you think about it, there's some frequency that it, like all of these things that are in real time, you'd have to see what do they call that? The flash rate or the reset rate or whatever is the frequency that they constantly, the calculation rate every second, of these platforms, they all have a little bit different. So you're getting that kind of auto compounding effect. Yep. Okay. Ethereum 3,600-ish, Cardano 229. It jumped up to 237 for a second. Why did it bounce straight up like that? I don't know. Who knows? There are no clear-cut reasons for any of these things. There's just a lot of news and it can sway. Occasionally you'll have someone get in there and big D it, but for the most part, there are no very clear answers to a lot of this stuff. We can make inferences, and that's kind of it. Oh yeah, Barno. That is also kind of cool. You can now top up, and well, the rate isn't 8%. The rate is 8% if you own 10% of your portfolio in Nexo token, and if you're willing to lock up that Cardano in these month-long contracts, which I am. But yeah, the rate is not bad. So we'll see. The idea, though, that you could take a loan against it, but my guess is you will be able to take loans against Cardano through Coty. Now, there's a couple of different ways you could skin this. They're paying a pretty fat rate on Nexo. I believe that's because they're trying to front run Abra. Abra is about to release their token where they're going to reward the stake. So basically, you can look at Abra. I've been digging into this a lot because I may end up doing some consulting with them. And so I wanted to understand their platform. So I've been digging in. And as I dug into Abra, they don't pay the rates as good. However, it seems a little safer, and it's also US based, and they're getting their banking charter in Wyoming. You can actually you'll be able to have an Abra bank account, full service banking, credit card, debit card, all the way down the list. You'll be and you'll be able to lock up your crypto, and you be able to get paid. So kind of while the rates aren't as good, what Abra does is they make it up in their PERX token, which they're going to be giving out, I think, on November 15th. Again, I'm not telling anyone to run over there and set up an account, but I would go bang around on it and look around. And I'm going to see if it makes sense to game that PERX token, because these exchange tokens usually do really well kind of year one. And so you look at what did the Nexo token do? Well, it was a couple pennies and it banged all the way up. So now if you have a Nexo account, yes, you can top up your ADA account. Before, all you could do was swap into it. Now you can top up, meaning if you have some Cardano and you want to go park it over there on Nexo and I think it starts at 5%, you can lock it to 6%. And if you have 10% of your tokens of your portfolio in Nexo tokens, which is tough to maintain because you got to constantly keep buying, but then you would get the 8%. So you got to weigh it. Now, what I've seen some people do, which is kind of funny, is they'll take an asset, they'll put it on Nexo, they'll borrow against the asset to buy Nexo tokens, which in the event of an unwind, people sell the Nexo token, and that's the problem. So the token goes up as the market goes up, and then people start taking loans and all this, but when their loans get blown up, they sell the Nexo token first because they look at that as being mostly liquid. We talked about this, I don't know, it was almost a year ago. We said this is going to happen, not because we have a crystal ball, but because it's common effing sense. If 10% of your portfolio is an exchange token, and then your portfolio drops and you have some margin call kind of event, of course you're going to sell the exchange token because it's relatively liquid. Well, it's very liquid. And you're going to cover your debts, even though you're losing on the exchange token. So yeah, are Abra accounts open to Canadians? I believe they are, Neil, and I'll tell you why I think they are. Because their whole deal is serving the exotic corridor. Abra wants to service American clients, and they want to service exotic corridors. So I think they're the biggest, and they're getting into all sorts of cool stuff. There are a lot of really cool plans at Abra. Now, who knows? Nexo is probably doing a lot of cool stuff. So good on them. I like Nexo, by the way. I use Nexo, and I have a not insignificant sum of currency units there. But They're spread out and locked up and all that kind of old stuff. I lock up stuff I like. So there you go. So Abra is doing all sorts of cool stuff. I'm actually going to I got to spend some time with some of their executives, really cool dudes, very chill. I've met a lot of crypto people and crypto executives and people in the space. And for the most part, I can say that in the crypto space, you have, a bunch of douchebags. You have a bunch of douchebags, self-important douchebags that most of them don't know what they're talking about. But I will say this, the people I met at Abra, they have a keen grasp on what they're talking about. They understand banking and mathematics, and that's why some of their rates are a little bit less. And they say because a business can't sustain these higher rates, they will go out of business, and then one day you'll click on and it just won't exist. Have I used Nexo Exchange? Yes, I have. I've used Nexo Exchange quite a bit. I actually moved a lot of Bitcoin into Cardano over the last month and a half. At I think 51, 50, 49, 52, like right around there, not this high. So yes, I have used the exchange. I like it. It's very easy to use. And I found it to be more cost effective than leaving the exchange with the tokens, right? So you're not doing swaps in the same way that you're doing swaps on Uniswap or swaps on MetaMask or even 1inch. When you're on Nexo, the swaps are basically free. They're just going from one client to another. You're not buying or selling. You're literally swapping. So an exchange is an exchange. You're not pinging the Ethereum network or pinging some other network or having to do some 17 currency, a hop and a skip. This is really cool. Let's see. Abra was my gateway to AID in 2018. It was so different back then. I don't know they evolved like this. Yeah, they're pretty dope, man. Yeah, they're cool. I mean, the dudes are cool and they understand math. And this is the thing. The people that I talked to, I got into it about Celsius one time with one of the Celsius. Well, Celsius has a weird, creepy group of like perverse community members that they're like Alex worshipers. Alex is a dick. Fair play. Alex is a dick. Mashinsky, good. He's rich, but he's a dick. And he throws it in your face every chance he gets. I'm rich. You don't trust my exchange? I'm rich. I do it with my own monies because I'm rich. Hey, Alex, we get it. You're rich. You have a small thing, and so you're very rich. You're going to let everyone know how rich you are. And then all these effing rubes get on Clubhouse, and they're like, Alex, we love you. You're like the Pope, but of crypto. Guess what? The Pope is a creep. Alex is a creep. Now, is he rich? Yes. Is Celsius getting stepped on by almost every regulatory environment? The same people that went after and pretty much booted BlockFi out of most of Eastern America? Yeah. Are they going to go step on Celsius? Probably. Why? Because they're a profligate lender, bro. They're a sketchy lender. And the other thing too is, and they do have a lot of money. They're very well capitalized. They do these overcapitalized loans, but they're lending to people that are profligate borrowers. They're lending to your Uncle Steve, who's in debt. They're lending to Donald Trump, who borrows over here to pay off what he owes over here, and then just borrow. So I owe $4, so I borrow $5, pay off the $4, and then that's my debt service. Then I go borrow $6 to pay off the $5, $7 to pay. So I'm not making money with any of my businesses. I'm just continued to borrow my way up. That's the Donald Trump way, and that's the way that most creeps do business. And they either eventually do something right or they blow up. Well, Celsius, almost all, and this came directly from one of their engineers. This isn't, hyperbole. They basically said, they pretty much said, crypto hedge funds is their main target. Now, if you're borrowing from Celsius, what do you as a hedge fund, right? You're one of the borrowers. What do you think they're doing? Well, there's some reports that say about 70 to 85% of that borrowing is so that they can short. So these are people that are going against the market. And again, it's not directly that if you short, you think Bitcoin will fail. Sometimes it's balancing out your balance sheet with a variety of, hedging maneuvers and tactics. I get that. But if 8 out of 10 of your borrowers are going against the market for one reason or another, then some of that is going to be incredibly risky gambling. And that we'll get into the article we're going to talk about in a second about the people that gambled that Bitcoin would be low, 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 low. These people taking the short side, and some of that is balance sheet machinations, but some of it is people that don't understand what kind of market we're in. Do not assume that because people have a lot of money that they know what's going on. Not only are there a lot of douchebags in crypto, they are a lot of idiots, talking head dummies, lots of them. This is why I don't go to conferences anymore. They drive me insane because after 15 minutes of talking to these rubes, me and Benji went to one. My buddy Benji, who is world-class figure skater, like one of the biggest, he's like a power lifter that was in figure skating. Like he would throw like these dancers up in the air and they never come down. They're still floating around in hyperspace. But we would go to these conferences and just after about an hour, we're like, let's get out of here, man. This is so awful. It's because people are either trying to steal from you, and this is any new market, I guess. People are trying to steal from you. They're trying to convince you to do something sketchy so they can take some of your money and put it in their pocket. Or they're just idiots. You know, time travel token and also the kind of, we're going to invent time travel and then we're going to come back and give everyone money. That's not a business plan, but there's a lot of bad behavior. So just assume everyone's out to get you. Yeah. So let's go. Okay. What else was interesting to me? Cardano's bumped up a little bit. Cool. Got as high as 237 last night. Don't know why. Polkadot's up. Cosmos is up. What are the other things? AR Weave, of course, floating back up. AR Weave just keeps banging up. It just keeps melting up, which is funny because it's outpacing Polkadot. Well, it's on top of Polkadot. So you think there's people front running? Yeah, of course they are. Well, they're forward looking. Render is banging up. It's having a pretty good day, up 12%. It's back over $1. Tiny market cap. This thing is going to bang out. I don't see any way it doesn't get $1 billion market cap. I don't see any way it doesn't. So this token probably gets $7 or $8. We probably see it. And again, do not buy anything because you listen to some rube on YouTube or Twitch, Twitter, Facebook, anything. Do not take advice from creeps you see on TV like this, right? But there's, as part of the general idea that any of these projects that have real utility, which I think Render does, taking 3D content or taking high density content and spreading it out and letting other people's compute resources do. Now, let me tell you what I think Render should do. If Render is smart, they cut a deal as quick as possible with NewNet so that they can leverage NewNet resource aggregation, distributed compute power, because Render is kind of trying to do what NewNet will do. And if NewNet catches on and it's managed, it's AI managed, it's going to one-up Render, because Render is a very specific thing. It's video content and things like that for film and TV. Whereas NewNet is saying, let's take all of those resources that are dormant or not performing and let's make them performing. In the same way we want our assets to be staking and performing, our dead assets or our assets that are non-performing, is the same thing. You have compute assets, you have computers, you have these little boxes around, you have stuff that has compute power that could be generating yield, generating return. Soon you will monetize everything in your house in the same way that we rent out the rental cars all the time. So there you go. All right, Singularity DAO kind of having a quiet. They've been really quiet. They banged up to $6, as you guys know, a little bit over, and they kind of melted back down. But it's not really a meltdown, is it? Because they're at $2.60, and they started this journey at 20 cents. So that's still what, a 13? Is that a 13x? It's not bad. It's not bad for seven or 8 months. Emmanuel would have to remind me. I don't know when. I'm trying to think. That was like, it was March. Wasn't it March or April? Anyway, long story short, if someone's willing to give me a 13x in 9 months, I will take it. I will not look the proverbial gift horse in the mouth. I'm very happy to collect. It's paying The unbonded staking's paying 17, almost 18%. The bonded staking's paying like 42%. So there's a lot of reasons to be excited about Singularity DAO. I am still very excited, and I will continue to dollar cost average. I bought some yesterday, as a matter of fact. I will continue to dollar cost average up to $3. Not advice. You do whatever the hell you want. It's worked out for me. Okay. Matrix AI, the scammiest token in all of AI. Why? Because it's not really AI. It's pretty much just scammy. Let's go back to SDAO real quick. Once you've earned rewards with unbonded staking, there's an option called Harvest. Harvest, yeah. So basically, Harvest is you snatch, and you would snatch those tokens, and then you could restake them. The problem is the Ethereum fees are astronomical, and they're getting worse and worse and worse. They're like, EIP 1559 will solve everything. It solved nothing. Nothing. Now, that gets me off on another question. For those of you that want to, we talked about this before. There is a token that a lot of the Ethereum miners are looking at transitioning to when ETH, because it's likely that Ethereum is going to, there's going to be a rumble in the marketplace, well, at least among the miners, and they're probably likely maybe going to have to fork and essentially have an ETH that is mined, managed. See, originally the idea was you have all these shards. One shard would continue to be mined, and the 63 other shards, I guess, of 64, if I'm getting my math right, would be proof of stake. And they would continue to have that proof of, but those guys are like, no, we're not going to get our revenues cut to 163rd of what 164th. So the thought is, or at least a lot in the Ethereum community are talking about when Ethereum, if Ethereum can get to their eventual transition over to proof of stake, that they are going to switch to mining Ravencoin. Yes, the dumb, stupid bird that Bruce Fenton and Tron Black created. Neither of those guys have any business messing with crypto. Tron is cool. Bruce is really funny. He's a really funny guy. He's a nice guy. He means well, but he's a Bitcoin maxi. I think he's a lawyer. He's actually a really cool dude, but as we all know, a cool dude does not a CEO make. And they were so busy. Anyway, doesn't matter. We don't buy animal tokens and we don't buy food products, right? Period. However, for those of you degenerate gambling a-holes out there, and I know there's plenty of you, see, I still have a big pile of Ravencoin because I was arb trading it and it got landlocked on an exchange that got hacked. So I'm supposed to get a bunch of, Raven coins repatriated at some point. I don't know when that's going to be in the future, but who knows? Maybe it'll be 3 years. And by that time, all the Ethereum miners will go over to Ravencoin and that coin goes from 11 cents. I don't even have it listed because we don't do animals. So maybe it gets it goes to $1 or $2 in the hype and frenzy. Because I guess if Ethereum miners start mining it, what is Ravencoin? For those of you who don't know, it was a Bitcoin derivative, another Bitcoin derivative. The idea behind Ravencoin is so that they couldn't game the mining. They would rotate between a whole bunch of different algorithms to mine it, but originally you could mine it at home. And anyway, they've gone through some changes. But anyway, for those of you that want to really dig and gamble into the game theory of it, Ravencoin might be something as a complete gamble, complete degenerate. Look, it's not worse than Matrix AI because Matrix AI is the crappiest token on the planet. And the community, by the way, the Matrix AI community, maybe well-intentioned, one of the dumbest group of admins I have ever seen. You want to go to a bunch of moron admins that will definitely lose you money, jump on, no matter, I'm not even going to tell you where to go. They have a Telegram group. That's the end of it. If you go there, you get what you get. When you walk past the gates of hell, all who pass. Okay, so what else do we got? AGIX is up a little bit, 2%. It's kind of flat on the day, but it's still up. It's 11% week, which is cool. It's still super, in my opinion, super cheap. I'm going to continue to add AGIX and Fetch under $1. So Fetch is down below 70 cents. Hasn't been that low in quite a while. So I'm going to continue to add. I'm adding Fetch. I'm adding AGIX. I'm adding Singularity DAO. I'm adding my AI plays, not all at once, little bits, little bites at the apple, continue to dollar cost average. COTI is not performing well. It got a little bump around the Cardano summit and the little announcement. But again, this is an early token. There's not very many of these. And it's a big if. Remember, this should be a small position because it's an if. It's an if this is the DeFi play, or at least one of the initial ones for Cardano. It's a big if. Remember, if my aunt had balls, she'd be my uncle. So far, I do not know if she does or not. Keep that in mind. You guys are like, ew. And Flow is doing okay on the week. It's up 23% on the week. That's not bad. So, but again, you have to compare to Bitcoin. And any of these tokens that are not up 24% are losing ground to Bitcoin. So who is competing with Bitcoin right now? Over the last week, it is only a very few. It is Theta. It is Near, which good on Near, right? It is AR Weave, which good on AR Weave. Warranted, justified? I don't know, but it's moving. 1inch is doing quite well. Rune, Engine Token, OGN is close. That's not bad. 23% on the week. That's cool. Tailcoin is kind of scammy. Render, and then Flow. All right, Flow just obviously got a lot more money, a lot more cash infusion. Also, Flow's doing a lot. I just don't know if it absorbs the token. I've never transacted the token. All I've done is lock it up. Now, every time I buy something on NBA Top Shots, I leave it on the exchange. Therefore, that's pretty minimally, pretty minimal utility of the token. People aren't really leaving a lot NBA Top Shots with their moments and coming back. Matter of fact, I don't even know if you can. I'm almost certain you can't. So we'll see. Okay. So let's get into first things first. Let's play. Should we play with a calculator first? Let's talk about Stellar first. Okay. So let's go here. You guys don't have to read the article. I will read it to you. So here's what's going on. Stellar XLM gained 16% after partnering with so funny. After partnering with MoneyGram to launch USDs, I'm telling you, the Ripple Rube community must be, seething, sucking through their teeth, just, and they should be, because this is a direct FU to Ripple. And if you further unpack it, people should kind of go, wait a minute, why would MoneyGram do this? Well, MoneyGram would do this because MoneyGram is in danger. MoneyGram is not performing very well, and COVID did not make things better. The Stellar XLM blockchain's native token gained more than 16% over 24 hours following news of its partnership with MoneyGram International, MGI. What happened? In a press release Wednesday, digital peer-to-peer payments company said it had integrated the Stellar blockchain to enable cash funding and payout in local currency for consumers using US dollar pegged stablecoin USDC. Now, we all know that USDC, which had been claiming, this is by Circle. USDC is from Circle, okay? Jeremy Allaire, they're the people that bought into Poloniex. Poloniex basically got nuked because it's a terrible, scammy exchange. USDC not USDC, but Circle got in trouble, whatever, and they moved on. Everybody pays a fee and goes. We then learned that USDC is not dollar for dollar capitalized. They have a bunch of quasi-sketchy corporate paper, unspecified, and some treasuries and some other stuff, and then 50% capitalized by dollars. So just be careful. All right, continuing on. The service will also provide near instant back-end settlement capabilities for MoneyGram's customers, and users will be able to convert USDC to cash and cash to USDC. This increases, I'll tell you what this increases. This lets people in third world countries launder money. Now they can say whatever they want, and Jeremy Allaire can get up there and be like, no, best intentions, bro, best intentions. No, this is them trying to launder money in third world countries. Why would you want to cut bigger holes in your plastic teller window for suitcases when you can just have these dudes go buy Bitcoin, flip it to USDC on some sketchy exchange like Well, there's tons of sketchy exchanges. Go flip it on some sketchy exchange, come back, and then pull cash out, right? Well, or just move it around the world. So I don't know. This seems anyway, good for Stellar. So this increases the utility and liquidity of digital assets while also enabling more consumers to participate in the digital economy. True, the impact of this partnership is expected to grow as more wallets and companies join the Stellar network. It's true, it's expected to grow, and I'm sure more wallets will join the Stellar network. Yeah. Okay, let's continue. MoneyGram had previously partnered with Ripple Labs, the company behind XRP, to enable cross-border payments. The company cut ties after the SEC brought a lawsuit against Ripple. Yeah, but they actually had said even before that the Ripple partnership wasn't working and that it wasn't making them money, and they didn't even hold the token. They sold it as fast as they could get it. But you know who else sold the token as fast as they could get it? Brad Garlinghouse and Chris Grand Larceny. And those are the top dudes. If they don't believe in the token and they're selling it, they didn't sell a few $1 million to buy a house in a Lambo. They sold 1.3 billion in XRP. That's not what you do with an asset you think has a bright future. Do you think those a-holes believe that XRP is going to 589? Hell no, dude. They're selling it as fast as they could, legally or otherwise. And the otherwise is what got them in jail. All right. United Texas Bank will serve as settlement bank between MoneyGram and Circle, the company behind USDC. So that's Jeremy Allaire. The partnership is scheduled to go live in select markets in 2021 with a further international rollout planned in 2022. My guess is one of a few things. This is Stellar trying to show, because Stellar and USDC are kind of working together. Obviously, USDC runs across Ethereum rails right now. And as you guys know, that's slow and clunky and incredibly expensive. I'm looking at the gas prices of Ethereum right now, and they are all over the place. It's very expensive. It's 3 times what it was 2 weeks ago. Ethereum is broken. You guys get that. He summed it up. Ethereum is broken, but it is here. And until there is a very clear, obvious, better option, we're going to be using this broken thing. So there you go. Okay. Strategy that blah, blah, blah. Okay. We don't care. All right, cool. So you get it. So what does this mean? Well, apparently Stellar is out rippling Ripple. So there we go. Let's talk about these Bitcoin shorts getting potentially nuked. Now we know that Bitcoin is 53.94. So Bitcoin is right at 54. Keep that 54 number in mind, but really the number is 50K. 50K is kind of the line of demarcation. If we don't see Bitcoin below 50K leading to tomorrow, there's going to be a lot of people that got pasted. Now, if it was just people buying insurance policies, most insurance policies, you don't ever use them. What do they call it? An uneven exchange of value. You pay insurance, you pay for the 1 in however many million time that you have to actually cash out on it because someone rear-ended you or whatever, or you did something stupid. So a lot of times if you have a big giant pile of Bitcoin, it might make sense to hedge your bets with some insurance. So you might do some put action. You might buy some puts as insurance, a little downside protection. So don't think that all short bets aren't, I believe it's going down, I'm negative, I think this, right? It's not always people shorting. It's not like these a-holes you see on Real Vision. These guys like, I short companies to zero. Well, you don't, because people that short for a living are just tend to be kind of nasty people. It just is what it is. And when your whole and they run around nasty the whole time. And then in the 1 in 10 times they get it right, when the markets don't go against them, then they're very nasty on CNBC and they walk around and big dick it and tell everyone how smart they are in a nasty way. So people that are statistically short are statistically nasty because they prey on death and chaos. I choose to invest more than in the future, rather than looking at someone that's failed. Like the homeless guy on the street, it's easy to kick him in the gut as you walk by, but maybe you shouldn't, as a general rule. So yeah. Okay. So there we go. Let us continue. Let's have a little fun. All right. So remember the 51 mark. So 50, 50, 51, and 54. Bitcoin bears risk getting trapped if BTC price remains above 50K. Here's why. Hash rate, supply shock, U.S. credit risks are likely causes for the rally. First of all, scrub that because Marcel, we've read some of Marcel's articles. They're generally informative, but very marginally accurate. Matter of fact, they are not accurate. So whenever I read something that is clearly opinion, we'll just push that off to the side. And let's just stick to what we can stick to. All right. BTC 32% weekly rally became bear's worst nightmare as Friday's $860 million options expiry is approaching. After breaking the 54,000 level, over 90, this is pretty funny, over 99% of the bearish bets using put sell options are likely to become worthless. What do we know? What do we know about the options markets? 90% of all options expire worthless. You know this. Now there's call and put options, but 90% of options contracts expire worthless. So if you are a buyer of options, you have a 1 in 10 chance. If you are a seller of options, you have a 9 in 10 chance of that being a gainful, what would you say, gainful, a worthwhile, a money making, a whatever choice kind of little phraseology you like for winning trade. But winning sounds dickish, so I try to. It's not a winning. I don't like to say that, but be a net seller, and you're on the plus side typically. All right, so here we go. Bears are in a dangerous position again. It's not bulls and bears, and this kind of outlook means that this person has a very simpleton's view of markets, but fair enough. Bears or people that purchase insurance are in a dangerous position. Well, no, not if you purchase insurance, particularly as Bloomberg's crypto outlook, Bloomberg. Oh, by the way, a year and a half ago, Bloomberg was saying that Bitcoin was a scam. You guys remember this, right? They said very clearly, Bitcoin is a scam. Crypto is a flash in the pan. It's a bunch of idiot degenerates. Well, that part they were right about. But all the other stuff, completely wrong. Bloomberg said it was a complete and utter farce. But I digress. Let's continue forward. Bloomberg's crypto outlook pointed out that Bitcoin's 50K resistance was about to flip support. There's no way they can know that. There's not enough metrics in markets to know what is support, because the last time they said 56 was support, and then where did we go? We went to 30K. Oh, where was that support, Bloomberg? I thought these guys don't know the markets. They don't know anything. They just leverage gossip. They are gossip. You know what? They know the future as well as the Fed knows the future. Zero. No one has a system. No one knows the future. All of us, to an extent, are gambling. Gotta be honest with ourselves. All right. So resistance about to flip support. Senior commodity strategist, no one cares, cited such factors as increasing adoption. This is true. Along with a diminishing supply. This is also true. So you know what? Good for Mike. Bloomberg also noted that traditional financial investors' concerns surged after the protection against the possibility of a U.S. government default rose to its high. Bullshit. I'm going to throw the BS flag. On the margin, on the aggregate, on the mean, people didn't rush into Bitcoin because they thought there'd be a sovereign debt default because of the U.S., because the Congress and Senate. No one bought Bitcoin because they give a crap about what they're doing. This is such a tiny, tiny little market still. Bitcoin just barely went over $1 trillion market cap. There's 3 companies on the S&P with a higher market cap. People are not investing in Bitcoin. It might be another reason why you might say, okay, crypto's cool. Bitcoin makes sense. But people aren't looking going, ooh, this debt ceiling thing. You know what, honey? Let's go into Bitcoin. Then we can sleep at night. I almost said an F-bomb, but I didn't. No. So I'm skipping past that part because that's very bad game theory. Another crucial metric that certainly fueled that certainly. When you say stuff like that certainly did this, that absolutely, there's no absolutist statements in crypto. That's nonsense. So we're gonna get past that. You got to see, when you guys read these articles, have your cognitive bias meter in like operating at 170%, because you don't want to read these articles and absorb the way that they're trying to put it out there. Like they know what is causing these things. Like they know why people are doing what they're doing. You want to get all of that nonsense out of the way and pluck the data out, data point by data point, and not be influenced by these idiots like Bloomberg and the dude that wrote this. And all. So just grab the data and run. Okay. Hash rate, the estimated processing power backing the mining network. The capacity took a big blow in May as China vetoed coal energy for the use of mining crypto. No. That's not what China did. China is trying to get away from coal-based energy creation, period. It wasn't just we're going after cryptocurrency. It's too tiny a market. China is trying to leapfrog and go green. They have bigger fish to fry than crypto, right? So they're trying to get away from coal-based energy, period. It isn't an anti-crypto or an anti-Bitcoin thing. A lot of times I feel like people in the crypto space think we're the most important. We are nothing. We are a tiny, tiny little rounding error on a balance sheet of world currency. And right now, 3 years from now, maybe the story's changed. But right now, this is a dust market. Dust. 2.3 trillion is dust. So we've got to put it in perspective. We are not unique, beautiful snowflakes. Okay, so I'm going to get past that. In early June, the country decided to ban cryptocurrency mining for good. Yes, again, this isn't an anti-cryptocurrency thing. This is a pro-China, pro-green, clean it up, manage things that we can manage type of a thing. Now, I think in that, China made some huge mistakes. Time will tell. All right. Took a bunch of miners offline. Great. This week, the bulls picked up on these favorable conditions and pushed Bitcoin back to its high. Right. Like they're all calling each other. Hey, bulls. Hey, bull, are you ready? Yeah. I'm going to call the other bulls. We're going to push the price. Shut the F up, man. This week, the bulls picked up on the favorable conditions and pushed the Bitcoin to its highest level since May 12th. 55,000 is $860 million options expiry on Friday. Well, so here we are. This is the only thing that kind of is interesting. See, even the way they say it, bears need a miracle. Why do they need a miracle? If the price went up $6,000 in 2 days, it can't go down $3,000 in 1 day. Like this is Bitcoin. This crap happens all the time. Look, it's down $1,600 right now this second. Why could it not be $49,999? It won't take a miracle. A couple of traders could do that on a couple of sketchy exchanges. Hit BTC, Bitfinex. Go look at all your usual suspects. If a couple of dudes want to bully down the price, they absolutely can. Miracle. It's not a miracle, dummies. Anyway, the $50,000 mark is a big mark. So let's get down to the guts of it. It's pretty much evenly split, positive to negative, bull to bear, short to long, call to put. That's probably the better way to put it. So there's 1.16 call ratio. And right now that looks, it means there's a slight difference between the $465 million worth of calls versus the $400 million in put options. Okay. That's really where it is. So it's almost even. Okay. Now, here are the four likeliest scenarios. Now, this is some interesting math. And that's of when the article came out. These numbers are a little different because people are piling on different sides of the trade. But basically, between 48 and 50,000, 3,500 calls versus 1,765 puts, the net result is $85 million favoring the bull instruments, the calls. Okay. Between 50 and 54. So my gut is we probably hold fifth, but you know what? I don't even have a gut feeling. I don't really care one way or the other. But if Bitcoin holds 50, which seems like it could be likely, then you have 6,270 calls versus 735 puts, net resulting in 290 million favoring the call side, meaning there's some money that's going to get nuked. Between 54 and 56, it goes to 6,900 to 50. Net result, 370 million favoring the call side. And above 56, it's 7,600 to 0. So basically everybody short gets liquidated. Well, their positions expire worthless. But again, 9 out of 10 options contracts expire worthless. It's just that this week it went up. It caught a lot of people off guard. This week, the people that were short, the people that bought insurance, the people that were pre-selling, they got beat up. Okay, cool. It is what it is. Bears are wrecked one way or another. To sum it up, the call side have absolute control of Friday's expiry and enough incentive to keep the price above 54,000. Well, even though it's not. On the other hand, bears need a 10% negative move below 50,000 to avoid the 370 million loss. So it'll be interesting to see if tomorrow, about this time, $370 million worth of positions get blown up. Now, if we're up around 54K, those losses start to approach $1 billion. Just poof, gone. You know, the only one that wins, the exchanges. And be very careful on some of these less scrupulous exchanges where they will pull shenanigans. Just be careful. Fructose are going to zero and crash is going to be brutal. I'm hoping for a blow off top 22 so I can get out. Fructose. Fructose like the fruit sugar? I don't know what's going on there. Okay. All right. And then the last thing I wanted to do, I want to spend a couple minutes to play with compound interest calculator. This thing's kind of fun. So let's take an initial investment of $1,000. Can you guys see this? Okay, so initial investment, amount of money that you have to invest initially. Let's say you're going to put $1,000 into a staking asset. So that's what we're going to do here. Let me make sure you guys can see this. Let's go big. Okay. So this is kind of fun. And let me get rid of this banner. Well, yeah, let me get rid of the banner so that you guys can see everything. Okay, so here's what you can do. And all you have to do is like investor.gov, but you can look up compound interest calculator. It's kind of fun. And it's kind of a fun thought experiment. And when you start doing this, you'll be banging around on these things for quite a while because it gets kind of juicy, but it'll shoot you a graph of what a trade would look like. Not a trade, but what an investment would look like if it was flat, if it was just money in your account versus what you could do. So let's pick something like USDC or a stable coin, because this will be kind of cool. Now let's not look at dollar cost averaging and contributions yet. Let's just simply focus on the initial investment. So we have $1,000. We're just going to think about it in terms of like a stable coin right now. Length of time, I think, God, hopefully I would think you would have at least a 3-year outlook, but let's just say we have a 1-year outlook, 12 months. That is it. And let's say our interest rate, well, over on Nexo, you can get between 8 and 12, but you can get 8 on USDC, which is cool. You can get 8 on your dollars, by the way. You don't even have to transition it into stablecoin. That's kind of cool. So let's say we get an interest rate of 8%. Interest rate variance range. We're not going to mess with variance of the interest rate. Compound frequency. Well, let's look. We have annually, semi-annually, monthly, daily. Well, on Nexo, as you know, and I'm just using Nexo as a proxy. This was probably the same on Celsius, probably the same on Abra. You're getting these daily interest, well, on anywhere that's paying an interest. But let's look at the difference between what you might get annually, like in a checking account. And that's if you, well, a checking account, let's be honest, it's 0.02. That's what you're getting. That's what you're getting, by the way. You guys know that? You get about 2 basis points. You're not even if you're magical, even if you're a super client, you're getting 0.2 of 1 point. So let's say you're a super client. Yeah, we love you, bro. Okay, let's calculate that. Your $1,000 sitting at Chase. Ooh, look at that. You made $2 in 1 year. The line isn't big enough to show the difference. But if you look in the middle of the screen, the future value is $1,002. The total contributions, 1,000. You made $2, bro. Where are you going to spend it? Let's go back up. That same $1,000 on Nexo. And this is just in terms of US dollars. This isn't, and by the way, this is the same if you go to Abra or anywhere else. Okay. You're going to get your, whatever that rate is. I'm just using the one that I'm most familiar with because I actually do this. Okay. Let's do another year. Let's do it at 8%. You guys know where this is going to go. And if this was, it's not going to be annually, is it? It's going to be daily. Let's calculate it. Boop. I'm going to have $1,083. At 8%. You say, why isn't it 1,080? Well, there's a third of a point in there just due to the daily part of it, right? Daily. Now, where you see this really blow out, and this is why staking rewards are so interesting, because they give you that compound interest effect. Again, it's in kind, which means you're receiving the asset, which is what you want, right? So if you're putting dollars, you get dollars. Putting Bitcoin, you get Bitcoin. Putting Cardano, Cardano. You get where I'm going with this. Well, so you have the potential for asset appreciation. But if you were just doing dollars, it's not just the 8%, but because of the frequency, that daily frequency, you're actually making a lot more currency units. Does that make sense? So where you really see it is when you push it out to about 3 years. Okay. Calculate. Now look at how that moves. Now we're at 1271. So you basically just did 27% over 3 years. Well, does anyone know what 9 times 3 is? So you just grabbed an extra percentage point. So you know what 1 point on it. So you just grabbed like 12.5 to 13% extra yield. Does that make sense? On top of the 8 points that we're getting. So the 8 points really becomes 9 and a little bit of change. So you get, okay, from 9 to 8, 1 and 8, it's about 12, what, 12.7, whatever. So, or 0.0. So anyway, the point is, so the compound interest is incredibly important, and these effects get bigger and bigger and bigger and fatter. And so what you can do is you can see, okay, where would I double my money with this? And you say, okay, let's go. Let's look at 4 years. This thing is really fun because you can run a bunch of tests and your brain can wrap itself around what you're trying to accomplish and how long it's going to take. Okay, so I'm at 1377, year 4. Now, I can tell you something. This will be less than 7 because of the rule of sevens, but let's take a look at it. For those of you that deal with interest a lot, you know what I'm talking about. 1491. So we're almost at 50%. You say, oh man, how is 8% giving me 50% over 5? Remember, the same happens on the negative side with inflation. Okay. But just keep this in mind. This is where the daily stuff. 6. Calculate. 16. Ooh, look at that. 61%. Cool, right? So here we go. And now remember, there's a lot more going on here, but yes. Okay. So, and then we go 7, calculate 1750. Now, why is this interesting? Well, it's a little, when you're taking the original and putting it back in and you're getting that increased compounding effect, you can see very quickly that your money can escalate quite dramatically. 8. Look at that. We're almost there. 9. And this is at 8%. 9. Okay. So that's one way to do it. Another way. So here, without any reinvestment, just the percentage compounded, it doubles at the 9-year mark, right? But another way you can do this is you can just get a calculator. Let's say you just want to do your own little version. You can get a calculator like for Cardano, because in this case, obviously you couldn't do, it's not daily, it's not monthly, it's not quite weekly. You want to say, well, how many payments? So you divide 365 days by, and this is just for the sake of Cardano because it's 5 days, 365 days by 5, it's going to give you, I think 72 or 73. Then you divide the interest amount. So let's say it's 7%. You divide that by the 72 or 73. That's going to get you that interval. Then, and whatever that interval is, let's say the interval is X. You then take that interval and you go, basically, however many of the in currency amount, like in dollar amount, times 1.000104, whatever that X amount is. And then you just go equal. And that starts showing you with each epoch how your value is going up. I know that sounds like a lot, but you do want to dig into, so play around with some of these compound interest calculators and you start to see why it is more valuable to get daily interest or weekly interest rather than monthly, semi-annual, annual, quarterly, and all that. It does make a difference. And if the money is more significant, well, then things become much more significant, right? So if you get some asset appreciation and the $1,000, for instance, well, $1,000 in Cardano last year is not $1,000 now. $1,000 in Cardano last year is somewhere around, well, it depends when last year, right? The price got really low during the summer and the whole thing. But you're probably looking at somewhere in the neighborhood of about 25,000, right? So calculate that. And actually, let's bring it down. We can't do daily. Well, you could do daily if you were on Nexo, couldn't you? So let's bring it down. Okay, it would be 8%. Let's go back to 3 years. Let's just see what 3 years would look like. 31,000. So your $1,000 investment in Cardano, as an example, that would be getting staking rewards, is now worth $31,780. And that's so that's kind of good, right? That's kind of good. And I urge everyone to go and Google compound staking calculator. Compound interest calculator, and bang around with it a little bit and start looking at how powerful these compound effects are and why it makes sense to stake all of the assets you can stake. And if you're looking at two assets and on par, they look the same to you, and you say, ooh, this one offers staking, this one doesn't. To me, that is enough of an incentive. Now, there's a lot of other factors. Where will this asset go? Where is the potential profit? Blah, blah, blah. Yes, I get it. But if it's apples to apples and it's two assets that look exactly the same, and you believe that the 18-month outlook, that the 36-month outlook is about the same, they're both going to go up. They both have an addressable market. You get them as close to apples as apples. And one offers staking and one doesn't, or one offers staking that makes a lot of sense, that's easier, and the other one doesn't. Go for the staking asset. Grab yourself some like kind or paid in kind, whatever the little terminology is, staking rewards where you can continually get paid to own the asset, because it takes an asset that you're waiting to perform and turns it into a performing asset. And for those of you that have a big pile of one asset and you're like, oh man, I don't want to just, you can take the staking rewards and you can turn them onto other tokens. Like with Cardano, you're getting some staking rewards, maybe $100 here, $80 there, $40 there, whatever. Use it to go invest in other stuff. And this is a good question, and we'll finish it off with this. Let's go. Let me go to 229. Okay, so we're at 220. Since it's a Cardano question, let's talk about Cardano. This will be the final thing. Why is Cardano's market cap greater than the following stocks? Colgate. How does one justify the valuation? Well, Gary, there's a couple of ways to answer this. The first way I'll say is that whatever the last sale was times the available market cap, that's probably a realistic number. So let's say there's 32 million-ish Cardano. There is 32 billion. Whatever the last sale was times all of those tokens, that's the market cap. Now, is that an indicator of value? No. That's an indicator of price. So how does one justify that valuation? Well, Gary, people are willing to pay $2.29 for a Cardano token, for an ADA token, because they believe it will go up. If you're buying Cardano or any asset, substitute whatever your favorite asset is. And again, I'm not trying to be condescending. I really want this to sink in. There's a difference between price and value, and market cap arguments, they're not relevant in the crypto space anymore, because this isn't a fully formed market. This is a market that's expanding very fast. And people, every time you purchase an asset, you're assuming that it's going to be worth more in the future, right? So what are you doing? You're buying a call, aren't you? Every time you buy an asset, you're essentially buying a call. I'm buying it for 5 cents. I think it's going to go to 10 cents. If you thought there was you thought we were at the ceiling, you wouldn't buy it unless you were covering a short position. There'd be no reason to buy it because it had already topped out. Does that make sense? So you're buying because you believe it's going up. Now, the problem with market cap arguments is it is a vanity metric. That's really well put, Matt. It's a vanity metric because the market cap doesn't mean anything, because these are not honest numbers. When you say market cap, yeah, that's the available tokens, 32 billion. Is it? Well, I can tell you for a fact. I won't tell you how many tokens that me and my buddies have, but I'll tell you that me and my small circle of buddies have a pretty good chunk of Cardano, and it's not available on the market. It's been parked on Daedalus wallet. It's not moving. It could move, but it's not moving. So those tokens are quiet. I have some Cardano on Nexo that's not only sitting there gaining yield, but it's been locked up. I'm in those kind of longer contracts so I can get some extra yield out of it. That's not moving, so that shouldn't be part of the market cap. There's a fair amount of Cardano that's been lost keys. That's gone. That's never going to be exposed. That's not part of the market cap. So and look at 80% of and this is just for Cardano, but this applies to all these tokens. 80% plus of the entire space of Cardano are staking. That's not there. That's gone. So really, what's the real supply, the circulating supply, if we're going to do those numbers? Probably 6 billion. There's probably 6.4 billion Cardano available on the market. And you say, well, that's a lot. It's not really a lot. So that's the real circulating supply. Now, the max supply is 45 billion, and that hasn't been unearthed yet. That will take many years and all this kind of stuff. So when you start digging into market cap arguments, you start realizing that those are pretty silly metrics, and they don't really matter. I do believe it is a bit of liquidity. It is a bit of it's ultimately these three things: use, utility, and adoption. Use, utility, and adoption. And I will tell you this: if I look at Colgate and BMW and Coinbase, and again, this is different for everybody, but do you think Cardano has the ability to usurp those companies in terms of use, utility, and adoption? Is it more likely that nations, countries, and individuals in and around Africa will take on digital identity, medical records, school records, decentralized applications, central bank-backed digital assets, treasury assets, lending loans, microloans, collateralization, and decentralized products in general? Or will they all be driving BMWs? Will they all be using Colgate products? They might. And again, I'm not telling you where I sit on this. I'm just telling you, this is what you should be looking at. You're comparing markets that are very difficult to compare. Comparing BMW to Cardano is like comparing oranges to rocket ships. They're both badass, but they're not directly comparable. It's not like decentralized toothpaste and then we could compare it, right? So it's tough to compare valuations. The way market cap is determined in the equity space is a little bit clearer. But there's a lot more, kind of sketchy, dubious behavior that can go on in the stock market. In the crypto space, we assume that everything is sketchy, and therefore nothing is sketchy because that's par for the course. Anyway, I know that's a long, circuitous argument and discussion and all that, and there are a lot more things to take into consideration. That being said, I would not compare market caps in crypto to market caps in the traditional equity space because there's just a lot different math and mechanics that would apply. And my gut feeling is Cardano will do more for the world than BMW and Colgate will ever achieve and have ever achieved. However, Coinbase, if there was no Coinbase, most Americans would not be in the crypto space. Coinbase has done a lot. Brian Armstrong is a dick, but you know what? Kudos to him. Coinbase is a well-built product, and yes, they have their problems, but they have changed the investing and the transactional landscape forever. I believe there are a couple of companies that have successfully changed the future, at least the near-term future. Coinbase is on that list, right? They did. They made better what was not good. and to an extent Kraken. But you don't think, when you think, oh, let's get into crypto, no one goes, yeah, Kraken. Kraken's dope. Cool, but Coinbase did that. So good on them. Okay, let's finish into that. Have a great day, weekend. Enjoy yourself. Stay out of trouble. Don't do anything. You know where we're going with this. Don't do anything that my poor, insolvent, drunk, strung out on meth grandmother wouldn't do, which just leaves so very little.
LeBron James, LeBron James, LeBron James, LeBron James.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet. Hey, we talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket. By any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet. Hey, you talking to the Prophet.
It's all fake news. It's phony stuff. It didn't happen.